This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Monday morning, we are starting a fresh new week. We are coming to you, as always, from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi, good morning.
Hi, good morning. Last week was tough for our markets. Let's hope this one's better.
But Friday was not as...
Friday was...
I mean, you know, looking at Thursday's US market change, one would have thought that Friday is going to be really bad. But Friday morning, you had that big announcement, right?
Yeah.
The inclusion in global bond indices. And I think that kind of swung the sentiment a little bit.
What about, are you guys ready for longer trading hours?
Oh, the evening one.
Yeah.
But I think that's going to be okay, right? I mean, it's screen trading. I mean, so which means everything is screen trading actually, but it's going to be...
As long as we don't have to report on it, then it's fine.
Reema just...
Well, don't count on it because, I mean, you know, something happens, US, I mean, you know, the reaction here. So, but we'll see. As
Prashant to the rescue.
All right, with enough help from you guys. Okay, well, let's just kick off with, you know, how things are looking as we begin another trading session. So you got... you know, as I said, Friday could have been a lot worse. It was bad, but it was not as bad as it would have been had it not been for the announcement which came through, which I'll get to in just a bit. I mean, I think enough has been written and enough has been spoken about it, but it is a significant positive. The Nifty, to just kind of set the context, ended below an important level, the 20-day moving average, which was 19,700. So we ended under it, just under it, not by very much, but the close was below. Global cues, I mean, I'll come back to the levels in a bit, are muted. I mean, they are cautious, right? The S&P is down about 0.23%. That was on Friday. The dollar index moved up a little bit, almost, you know, on the other side of 105.5. Oil is steady, pretty, holding at about $94 a barrel. And oil is the big one, right? It's up 30% from June. So that's a very significant sort of, you know, change in terms of large importers like India and the terms of trade. In the US this week, there is another potential risk. So, you know, it comes up every now and then. It's come up again, which is that without a deal between the Republicans and the Democrats, US government will shut down on the 30th of September, literally shut down, because they can't spend on pretty much anything beyond the 30th, which is on this Friday. So I think that's the big one, which is, again, kind of center stage. Usually it gets done. No reason to expect it will not get done this time around as well. But, you know, going into it around that time, it does cause a bit of volatility, does cause a little bit of nervousness, etc. So we'll watch. The other thing is, I mean, in the US context, is that, you know, the auto strike, the union workers' auto strike on Friday, that got sort of expanded to about 40-odd facilities across, you know, large OEMs, large automakers in the US. So it's more of a economic sentiment, etc., negative. It's not a positive. I mean, the degree of negative, etc., can be argued. India's inclusion in the global bond index is a big positive, and don't take away from that. It's positive on so many fronts. You know, you come back and you look at oil, which is high, you look at, you know, dollar, which is higher, but you got this positive on the other side. And it's a one-stock $30 billion adjustment and then an annual inflow of about $15–18 billion. Of course, you know, it only gets implemented from the middle of next year, but there could be, you know, FPIs, etc., which perhaps will sort of preempt that with positioning now and till the time of implementation. So this is a big positive, and it will continue to play out over a period of time. So I think one has to keep that in mind now, especially when you look at what's happening with the dollar, oil, etc. Coming back to the sort of levels here, you got the Nifty pivot, which is, I think, still around 19,700, which is the 20-day moving average. Let's see if the market stays around this particular level or there is significant divergence. On the downside, it's important that 19,605 does not break, which is the 61.8% retracement of the entire rise from the 31st of August low to the 15th of September high. So, you know, 61.8 is the big golden retracement, and that's, I think, that needs to be held on to if the market's got any sort of chance that, you know, this is it. This is the correction that we are seeing, and we kind of either spend some more time here or the market starts to move up. Bank Nifty, it's interesting. I mean, the Nifty did more on the downside. The Bank Nifty actually ended absolutely flat. So The 61.8% is 44,778. We ended below it intraday, but we ended above it. Sorry, we kind of came up above it, but could not close above it. So again, that becomes the first level as we begin another sort of trading session, if that comes into play again. On the downside, the next downside level to watch is 44,370, which is not very far away either, less than 1% or so away compared to where we left off on Friday. I think the GIFT Nifty is indicating a slightly higher start. I would say watch the open, don't kind of rush in or anything of that sort. More than what's happening here in India, what's happening in the US for the first time in 2023 is looking like things aren't going all that well. So you don't want to get caught in, what perhaps would be a global kind of a pullback. And it's unlikely if the US starts to correct a little bit, meaningfully, etc., things here will look up and up. Most likely it'll be sideways, if not lower. And that's the reason why I'm saying no harm in waiting on the sidelines and letting the market tell you what it wants to do next. It's a flattish kind of a start, 15 odd points lower as per the GIFT Nifty. Rima.
Well, on the US markets, the S&P 500 is now down 4.2% for the month of September. The Nasdaq is lower by 6%, headed for its biggest monthly loss since December. The cut on the Dow is a little more muted at 2.2%. So just to add to that data point about the US markets turning a bit tumultuous and a bit iffy. In that context, the Indian markets is still outperforming. Yes, last week we have 4 consecutive sessions wherein the markets ended in the red, but month to date, the Indian markets are still up 2.5%. So we've clocked in a pretty good outperformance, but investors are now so deep in the money when it comes to the Indian equity markets. FIs are pulling out. The FPI sell figure in the month of September has crossed 10,000 crore rupees, according to the latest data from NSDL. So that's something that the street, not 10 crore, it's 10,000 crore. That's the FPI selling that we've seen in the month of September. The big Q is going to be the September expiry, and that's going to be on Thursday. And also keep your eye on the IPO market. Today, you've got 2 big IPOs opening up. One is JSW Infra, and the other one is Updater Services. And we'll talk more about both of them.
Well, last week it was, in cricketing parlance, it was like you had Sachin, Sehwag as well as Saurav. When they don't perform, then it became tough for the Indian cricket team, right? So last week you had HDFC Bank, Reliance Industries and ICICI Bank. They accounted for close to 70% of Nifty's fall. And by the way, it was the worst week that we had in the last 7 months or so. So that explains why last week was a little bit of a weak party. But it appears, the bulls, they partied very, very hard. And now there are some signs of everyone getting a little bit sober, taking cognizance of what's going on in terms of the global market, the headwinds that are facing us as well, higher crude prices. The Fed could keep rates higher for longer. And also you have global cues on the whole, they're a little bit subdued. The Nifty, well, it's showing some sign of weakness, and it closed below the 20 DMA even on Friday. And on a day-to-day basis, you're seeing the Nifty, it appears it's a little bit afraid of heights, because every day it's come off close to around 150 points from the high point of the day, telling you that at higher levels we're seeing an intraday pullback, but that couldn't sustain. Even in Friday's trading session, it appears we're heading to around the 19,800 odd mark, but then we did see some selling from that mark. The problem pocket has to be HDFC Bank. Remember, that's been one of the big outperformers in the last few years. But, just in the recent parts, 18, 24 months odd, HDFC Bank has been a bit of an underperformer. That's the chart on Friday. Once HDFC Bank loses its way, the Nifty loses its way. Not just on Friday, even for the week. HDFC Bank was down close to around 7%. The Nifty as well did see selling pressure. It was down close to around 1.5%. It was down actually close to around 2%. That's a 7-day chart. That's why that's telling you the picture. So HDFC Bank, that's a bit of a problem pocket. You'll want it to bounce off these levels because it's breaking down even technically right now. Fundamentally, though, part of the street believes that it's very, very delicious. So I'll be watching on HDFC Bank from here on. Can it hold on to this 1,500 rupee odd mark? What do the FIs do? They added shorts. They added close to 9,000 short contracts, though they continue to remain net long with 53% of their positions on the long side, 47% on the short side. But just take a look at the long positioning. A week or so ago, you had more than 60,000 net long contracts. That number has come down by a fifth. It's come down to around 12,000 contracts odd. What's that telling you? There is unwinding of long positions and there is some short build up as well. I'll want some more shorts to get into the system. You get some bit of good news and then those shorts could be forced to cover out. This market has been devoid of any kind of short positioning and now there are shorts in the system. I wouldn't read that as such a bad thing. The problem is they're writing calls as well. So they don't expect the Nifty to go past the 19,900 odd mark, which brings us to the options data as well as the data points. Writing was seen at around 19,800 call in Friday's trading session. The premium there was roughly around 50 rupees odd. So 19,850 to 19,900, crucial levels on the upside, resistance levels on the downside. The 50 DMA is around that 19,600 mark. So that's the important point. A bit of a range between 19,600 to around 19,850. For starters, the gift Nifty suggesting some bit of green. HDFC Bank, that's the stock that you should be focusing on. Can it give up its underperformance? Well, time will tell.
All right. So that's been the big one, the big underperformer, and we'll keep an eye on that one. All right. What we'll do is we'll have just look at the SGX, the GIFT Nifty. Sorry, it'll come up on your screen. I think we'll have about a 13-odd point lower start according to the GIFT Nifty. 19,695 is where we're at. Well, let's just get you a couple of calls. Rhythm Desai of Morgan Stanley on equities weighs in. He says the opening up of the sovereign bond market and resultant inflows are likely to be beneficial for the Indian equity returns due to the positive impact on growth, likely softening implication on interest rates and accentuate the case for India's return correlations to decline. He says in terms of sector preferences, they like financials and consumer discretionary and would avoid global materials.
Venugopal Gare of Bernstein says India is heading and has already entered a new upcycle which will last for several years. He says those like us who've seen previous cycles as an equity market participant would have seen the disbelief in a cycle all through the period as every year appeared to be a peak, that the time for earnings for markets. He says any corrections which is characterized as the end of the cycle, he says the reality is that all signs suggest that we are in the next phase and a similar disbelief on a cycle remains. He adds until they see a case arguing against the room for an upcycle, they would prefer remaining as buyers on any correction in the equity market. He also adds financials, capex-linked stories will lead the cycle, followed by a broader recovery in consumption.
Okay, some money market views now. B. Prasanna of ICICI Bank says that hawkish guidance by FOMC and status quo by the Bank of England and Bank of Japan kept dollars strong against G3 currencies. He says rupee strengthened marginally on the news of bond inclusion and global bond index. However, the move mostly reversed as rising crude prices and US yields remain headwinds for local currency. He says the rupee is expected to remain under pressure amid strong dollar environment and trade within the $82.7 to $83.3 mark, with the RBI smoothing out volatility.
On the bonds, B. Prasanna says even as US Treasury yields attain new highs, local bonds remain supported owing to the announcements of inclusion of Indian bonds in the JP Morgan Global EM Bond Index. He adds this augurs well from long-term demand-supply perspective, and he expects the yields to inch lower despite tight liquidity and firmer crude prices. He expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.2% with bull steepening bias.
Well, we have a lot of stock-specific action to track for you on the news flow that we saw over the weekend, but let's run you through our top 10 list that we're tracking for you. We're looking at Bajaj Finance, Sequence Scientific, Strides Pharma, Imami, Apollo Tyres, Vaibhav Global, Ircon, Sri Renuka, and Karnataka Bank. All of them on the back of positive news flow. But we expect Delta Corp to react to that tax notice that they've got, so that one will open up in the red.
That's going to be the big one, right? Delta Corp in today's trade. But back to the global market action. Last week was a bad one for the U.S. markets. The S&P 500 lower by 2.9%. The Nasdaq lower by 3.6% as the higher for longer rates narrative continued to gain some more ground.